Bitcoin saw a staggering plunge of over 15% in just a few hours, causing panic among investors. The cryptocurrency market is reeling from this shocking development. Here's everything we know about this dramatic price drop and its implications. In recent days, Bitcoin has experienced a significant decline, stirring anxiety among investors and analysts alike. This downturn has raised concerns about the future viability of the cryptocurrency market. The decline has been attributed to a combination of factors, including increased regulatory scrutiny, macroeconomic pressures, and a broader sell-off in financial markets. The Federal Reserve's recent interest rate hikes and inflation concerns have exacerbated fears, leading many to liquidate their positions in cryptocurrencies. As investors react to these developments, several scenarios could unfold in the aftermath of Bitcoin's decline. One possibility is a continued sell-off as panic sets in, which could push Bitcoin's price down further, potentially testing the critical $30,000 support level in the coming days. Conversely, if market sentiment stabilizes, we could see a rebound as opportunistic investors seize the chance to buy at lower prices. Such rebounds have historically occurred after sharp declines, driven by a belief in Bitcoin's long-term potential. Expert predictions suggest that regulatory developments over the next week will play a crucial role in shaping investor confidence. Statements from major exchanges and regulatory bodies could either calm fears or exacerbate the current situation. The cryptocurrency market is particularly sensitive to regulatory news, as uncertainty can lead to swift reactions from investors. The impact of this downturn extends beyond price fluctuations. It raises questions about the overall credibility of the cryptocurrency market. Will this decline deter new investors, or will it serve as a catalyst for reform and greater market stability? As we navigate this turbulent landscape, the focus will remain on how regulatory clarity may influence market dynamics. With the potential for increased regulation, the future of Bitcoin and its standing in the financial ecosystem is at a crossroads. Investors will be closely watching for regulatory announcements, which could determine whether the market stabilizes or faces further challenges ahead. The lead-up to today's Bitcoin price drop involved a series of events that created a perfect storm for volatility. The cryptocurrency market has been particularly susceptible to sudden changes, and Bitcoin's price had been fluctuating dramatically over the past few months, oscillating between $40,000 and $50,000. Analysts pointed to increased regulatory scrutiny as a key factor. Governments worldwide, from the United States to China, have been moving to impose stricter regulations on cryptocurrencies, aiming to protect consumers and stabilize the financial system. This regulatory pressure has contributed to a climate of uncertainty. Additionally, some high-profile investors, including influential figures in finance and technology, recently voiced their skepticism about Bitcoin's long-term value. This commentary has instilled doubt among retail investors, many of whom are new to the market and may lack the experience to navigate turbulent conditions. Unlike previous market corrections that unfolded over extended periods, allowing investors to adapt their strategies, this sudden decline was amplified by automated trading algorithms. These systems triggered mass sell orders when Bitcoin's price hit predefined thresholds, exacerbating the downward spiral. The historical context of Bitcoin's price volatility underscores the inherent risks involved in cryptocurrency investments. As Bitcoin continues to grapple with regulatory challenges and fluctuating investor sentiment, the impact on the broader market could be significant. A sustained decline could deter institutional investment and diminish interest from retail investors, leading to a potential long-term bear market. Looking ahead, it is crucial for investors to remain vigilant and informed as the cryptocurrency landscape evolves. Market participants should closely monitor regulatory developments and consider diversifying their portfolios to mitigate risks. As the dust settles from this latest downturn, the resilience of Bitcoin and the overall cryptocurrency market will be put to the test. Bitcoin's recent sharp decline has sent shockwaves through the cryptocurrency market, raising alarms for both individual investors and the broader financial landscape. Approximately 1.5 million individual investors hold Bitcoin, with many now grappling with significant losses. This sudden downturn has triggered fears of a wider market sell-off, leading to declines across various cryptocurrencies. The overall market capitalization of cryptocurrencies has plummeted by nearly 10%, reflecting a climate of widespread panic among investors. To understand the implications of this decline, it's essential to consider the context surrounding Bitcoin's volatility. The cryptocurrency market has always been characterized by dramatic price swings, influenced by factors such as regulatory news, technological advancements, and shifts in investor sentiment. Recent global economic uncertainties, including inflationary pressures and geopolitical tensions, alongside tightening monetary policies in major economies, have further exacerbated this instability. As a result, many investors, particularly those new to the market, are now facing a harsh reality regarding the risks associated with cryptocurrency investments. The immediate impact of this decline is profound. Many individual investors are experiencing financial distress, which could lead to a decrease in consumer spending and overall economic confidence. Furthermore, this downturn may dissuade potential institutional investors who were contemplating entering the cryptocurrency space. Their hesitation could stifle future adoption and innovation within the sector, ultimately hindering the growth of decentralized finance and blockchain technology. Politically, the decline has prompted renewed discussions among regulators about the necessity for stricter oversight to protect investors. As governments around the world grapple with the implications of cryptocurrency volatility, there is increased pressure to establish a regulatory framework that ensures market stability while fostering innovation. This regulatory scrutiny could reshape the landscape of digital currencies, potentially leading to a more secure environment for both investors and businesses. Looking ahead, the future of Bitcoin and the cryptocurrency market will depend on various factors, including regulatory developments, market sentiment, and technological advancements. Investors and stakeholders must adapt to this evolving landscape, focusing on education and risk management to navigate the inherent volatility. A clearer regulatory framework could provide the stability needed for a more resilient market, fostering renewed confidence among investors. On May 11, 2026, Bitcoin experienced a dramatic price drop, plummeting by more than 15% within just a few hours. This sharp decline began around 10 a.m. UTC, when Bitcoin was valued at approximately $45,000. By 3 p.m. UT, the price had fallen to around $38,000. This unexpected movement in the market wiped out nearly $100 billion in market capitalization in mere hours. Key figures involved in the market include major exchanges like Binance and Coinbase, which reported increased trading activity as investors reacted to the sudden downturn. Notably, this plunge is particularly shocking as it marks one of the largest intraday declines of Bitcoin since the market crash in March 2020. To understand the context of this decline, it is essential to consider the current regulatory landscape. Governments worldwide are increasingly scrutinizing cryptocurrencies, with several countries proposing or implementing stricter regulations. These measures have created an atmosphere of uncertainty and fear among investors. Additionally, influential market analysts have issued bearish predictions regarding Bitcoin's future, further exacerbating negative sentiment. This combination of regulatory pressures and pessimistic forecasts has led many traders to reconsider their positions, resulting in a wave of sell-offs. The impact of this decline is significant, not only for Bitcoin, but for the entire cryptocurrency market. Many altcoins also experienced sharp declines as investors sought to mitigate losses by moving to more stable assets. This sudden drop has raised concerns about the overall health of the cryptocurrency ecosystem, which has only recently begun to recover from previous downturns. Moreover, the volatility showcased in today's events could deter new investors from entering the market, potentially stunting growth in an industry that thrives on participation and innovation. Looking ahead, the outlook for Bitcoin and the broader cryptocurrency market remains uncertain. Analysts suggest that while this decline may prompt short-term panic, it could also serve as a catalyst for necessary market corrections. As regulatory frameworks become clearer, the market may stabilize, potentially leading to renewed investor confidence. However, traders should remain vigilant, as the landscape continues to evolve rapidly. The coming weeks will be critical in determining whether Bitcoin can regain its footing or if this drop signals a more prolonged downturn. How will this sudden downturn influence the future of Bitcoin and the credibility of the cryptocurrency market? Share your thoughts in the comments below, and don't forget to subscribe for daily deep dives into the latest news.